What's going on, everybody? It's your boy, the Mad Pupil here. We're just coming back with a new video. We're going to cover the opening range for the New York session. All right, so this is a AM trade that we took over here in the winner circle in the Discord. I just want to go over kind of my thoughts and my reasoning behind everything and why I like this pattern the most, and why I think it's relatively easy and very quote unquote algorithmic to trade and be consistent with. So going into the morning session, we had a good bit of selling going on. Also, we traded below the New York Open up here, which was 41.74 and 3/4. We traded down below it. We had a bullish bias at the end of yesterday's session, so we were able to kind of have a framework going into it. If we got the price trading below the New York Open, then we're pretty much good shape and kind of on line with our bias. We closed in some sell side inefficiencies. If you zoom out a bit, all this price action here completely closed in. We're running into or coming trading near a bullish order block here on the hourly. So that's something that we kind of want to annotate, because these things, or these signatures in price, generally change the delivery of price. Order blocks are always going to change the direction of price action. Sometimes they can be triggered through depending on high volatility, but for the most part, there's something we should recognize, that if we were, say, holding a short, we would know that kind of within this range we need to close a trade, or vice versa, we should know that there could be a potential reversal on our hands. So we also had a SMT, which is some more topics I'm going to cover here on the channel. But an SMT is basically a failure swing to make a lower low and take these stops here, because paired with the bullish bias, a run below here would be a signal for buying if you're using Smart Money Concepts. But on NQ, you can see that it failed to make a lower low, right? And so that means that there is strength in the indices, so there's some buying going on in the indices. So this is just a fake move below a short-term low, basically a turtle soup buy, if you're familiar with ICT concepts, and then we run higher. Okay, so this fake move below is going to draw in shorts, which is going to be the counterparty for the buyers, right? So we didn't take the come in to the marketplace here, but once we saw this, this is a very reliable pattern and something that you can, use as a signature, as confirmation for your bias. Zooming back in. So with all that being said, and kind of directing us towards a bullish bias, at least for the morning session here, and we had some buy side imbalances that we needed to trade into that we ended up getting at the end of the morning session. But particularly in the New York Open, ICT talks about a false high or false low, if you're bearish, being put in right at the bell. So you see right here at 9:30, we had this little order block created, and boom, price just exploded up, taking out this highs right here, but putting in a pretty equal high right here in line right at 9:30. So that's automatically a very suspect signature in price here. We have these equals highs put in. I like to call this basically just an open range false high. So we had this high put in, right? So leaving it being this very clean. Price doesn't really like cleanliness. It likes the rough, jagged edges. So we know automatically that, okay, if we get an entry, we're going to take a long and we're going to come back and take out this. So price came and traded and nicely respected this order block here, right? The body of the candles, very nice rejections off of it. Didn't trade much, if really at all, into this fair value gap. left this open, which is a signature that we want to see. We don't want to see it coming down, trading down into this candle, this very last down close candle. And if it came into even this imbalance right here, um, it will kind of be invalid, and especially if it traded down here into this order, this February gap right here. That's something we generally wouldn't want to see. But the respect in price really shows the institutional sponsorship, and that the SMT coming near a bullish point of resistance, that our bullish bias may pay out. So we took an entry here off of these order blocks right here, right? And it kind of just wicked around for a while, which kind of didn't give me hope for the rest of the day, just because this is usually a very kind of quick, swift movements. Even though there wasn't a lot of drawdown, but it was just kind of a lack of follow through. We had a high put in at 9:30. We entered about 9:45, and generally, this took about to 10:10, which is about the end of the algorithm. But I was figuring we'll see a little more aggression. But since there was no news today, there was no news impact drivers. I kind of just kept my expectations pretty low on price action. So as we get this kind of macro kicking in, if you study ICTs concepts and you are familiar with the 950 to the 910, the 1010 algorithm, the macro inside of the algorithm, you would know that it's going to want to deliver to its target during that little period of time where the algorithm is going to really spool and head towards the draw liquidity. And just to backtrack a little bit, I would just like to kind of say that you can't really just rely on the false high or the false low point. There has to be a higher time framework behind this setup, and why that you can expect to see this. You should be able to expect that if you're bullish, in the higher time frames, and there's a higher target like this hourly fair value gap, you're probably gonna see this false high put in that you can aim and target. And that's generally it. Very simple. I'll be doing more breakdowns of this. We are going to really dive into this opening range. This is something I use, most morning sessions. I don't trade every day, but the AM sessions I do trade. This is the setup I use, waiting for the high being put in and having a higher time frame bias, not just coming down to the 5-minute and just saying, oh, it's just going lower lows or lower highs. There's a higher time frame analysis behind this, and I will also go into the channels about how I approach the higher time frames and how do I bring that bias down to low time frames to create entries. If you like the video, go ahead and comment, drop a like, subscribe, share it to your family and friends. I'm just out here trying to be the best I can be and help everyone else in the process. Peace.